Good afternoon, everyone. My name is John Jiminod, EVP of Production here at Angel Oak Mortgage Solutions. Today, we're going to do a deep dive into our debt service coverage ratio program, which is our most popular program by units. And we're going to introduce our subject matter experts here in about a minute. We'll let people log in. Guys, this is a great loan to get started with. If you're not closing any non-QM business, we've had one ace calls it a bulletproof loan. So we'll get started here in about 30 seconds. Everything we're going to do here today is on our website. This isn't recorded. This will be recorded, but this is not a recorded session. It's all live. We're going to learn a lot from our subject matter experts. We will get this recording out to you before end of day tomorrow. And please feel free to use the question queue. We will get your questions answered. If not, we will have your account executive reach out to you directly to answer any questions or go deeper into your scenarios. So give it about another 15 seconds and we'll get started here. Okay, people still logging in. Excuse me. Okay, let's get started here. Again, my name is John Jiminod, EVP of Production here at Angel Oak Mortgage Solutions. I've been here about 12 years. It'll be 12 years next month. And we have two great subject matter experts. I'm going to start with the First Lady of Non-QM, Stacy Flanagan. Stacy, please introduce yourself.
Hi, guys. Thank you so much for joining us. I am Stacy Flanagan down in the Tampa Bay region of Florida. So I'm so glad that you guys are here and to learn about our DSCR. It's definitely my favorite program that we have. I have been here for 12 years, so looking forward to helping you guys close some more loans and understanding the DSCR program.
Yeah, thank you, Stacy. Also want to introduce Jack Stevenson, works out of our Atlanta office. Jack, please introduce yourself.
Yeah, thanks, John. Happy for all of you guys to join us. I'm based out of our Atlanta location. Been with Angel Oak for 6 years, but yeah, happy to deep dive and really discuss this program with you guys today.
Yeah, guys, we're really lucky to have Stacy and Jack on this call. Their knowledge is so deep, not just in the debt service coverage ratio program, but in all things non-QM. They're also at the top of the customer service food chain here because they absolutely provide the exceptional customer service. So, but before we get started here, we want to launch a poll, and the poll is who has originated a debt service coverage ratio loan in the last 12 months. And while you are answering this poll question, there's a lot of stats out there. Like I said, our debt service coverage ratio is our most popular product by unit volume. And these are really, really, really easy loans to originate. And, so we're going to teach you basically almost how to be an account executive by the end of this call. Not taking anything away from Jack and Stacy. So, all right, can we?
Wow.
What does it say? Because I can never see it. So, Stacy, give it to me.
50-50.
Wow. Okay. And guys, that's usually, we're seeing more people getting into non-QM, whether it's bank statements or debt service coverage. Those are the two most popular programs in there. We'll probably do another bank statement webinar next month, but 50-50, that's interesting. So for the 50% that have not, hopefully you'll learn a lot today so you can start diversifying your portfolio and close more loans. So Stacy, let's like I mentioned, this is being recorded. We will get this out before end of day tomorrow, but everything we're doing is from our website. So Stacy, let's go cover highlights of our debt service coverage ratio program.
Sure. We've had a lot of enhancements. Oh, go ahead.
Can you see this?
Yep.
Okay, perfect. Thank you.
I can actually zoom mine in too a little bit. We have had a lot of enhancements, guys, on this DSCR program recently. So for you that have done DSCR with us or are very familiar with our DSCR, please listen to what we have to say, because there's been a lot of changes, game-changing enhancements that can really help you guys close some more loans. So on the DSCR, we all know it stands for debt service coverage ratio. It's for investment properties only. We go up to a $3 million loan amount. The minimum loan amount is $100,000 on this program. We do purchases, cash out refis, rate and term refis, and delayed financing. So we're seeing a lot of borrowers that are purchasing investment properties very quickly. They are having to put cash because there's a backup offer, or maybe they did a cash contingency contract. So they're purchasing it with hard money or cash. We will do delayed financing and let them refinance right away using the purchase price and giving them their full LTV as if it was a purchase. So we're not even going to hit them for cash out. If they qualify for 80% LTV on a purchase, we're going to give them 80% of their cash back on delayed financing. So I know that's been coming up, at least with me, a lot lately. So I kind of want to emphasize that. We have many different ways. So we all know the hardest part about a DSCR is, what is that market rent going to come in at? What is that appraiser going to give me for my 1007 market rent? We now have multiple ways to help you know what we're going to use for that market rent ahead of time. At the pre-qual stage, Jack and I are going to help tell you what we can get for your market rent in two different ways. So if it's a purchase, and your LTV is at 75% or less, whether it's a purchase or a refi, if you're at 75% LTV or less, we're going to pull what's called a rental AVM. So when you're sending us the pre-qual, it's going to ask you for the property address, and that's why. We're going to pull a rental AVM. It's not a value AVM, it's the rental AVM. We're the only lender that has this available to them. And what it is it's going to give us what they project the rent market to be in that area for that particular property. If that market rent works, we're going to run with it. You don't even have to order a 1007. You still need the 1004 for value. Yeah. People are like, I don't have to order an appraisal. I'm like, yeah, we still need to order an appraisal.
Still need the value.
We just don't have to order the rental portion.
Right.
So it does save your borrower about $200 on that 1007. And again, you know up front what your rental AV or what your market rent is. That saves us a lot of headache. Also, if it's a purchase and you need higher than 75 LTVs, let's say you need 80, we now go to 80% on a short-term rent. I or Jack will pull our short-term rent, which we use AirDNA. We can go to 80%, which is brand new. It was 75 for short-term rent. We're now going to 80% on short-term rent. We're going to pull that AirDNA report. Now, many lenders care about the occupancy concern, the occupancy ratio, or the market score. We don't look at that at all. We take that projected revenue, which is yearly, divide that by 12. That's my monthly market rent that I'm going to use on the short-term rent.
John,
so you're not doing what they call in the industry, there's no haircut on that. That's the number you're going to use.
John, do you want to pull that example real quick? Or
yeah, I'll do that, Jack. Yeah. So this is a perfect, can you see this?
Yeah.
Yes.
Yeah. So this is a perfect example of what Stacy's saying. So you see this $103,000. We're just $103,000. Sorry about that. And we're just going to divide that by 12, and that's the income we're going to use.
You know,
so that gives us $8,583 a month that we're going to use for your market rent.
Yeah. And we don't even care about your market score. We don't care about your occupancy percentage. Again, 75% LTV or less on a purchase transaction for short-term rental. We just come to AirDNA. We pull this up front. You guys are knowing whether or not the loan's going to work, a DSCR short-term rental purchase up front within what? Me and Stacy are working pretty quick, but within seconds. Yeah.
We'll pull that.
And guys, and Stacy says it, but I really want to emphasize this is without having that up front, boy, it was a little bit of a crapshoot, right, Stace? So it's
Yeah.
from a standpoint of not knowing, and it just really created a lot of indigestion along the process. So, Angelo continues to stay on the forefront of trying to find ways to make loans quicker and easier to close, because we all know it's speed and accuracy that really determine a smooth closing.
Yeah, and just to touch up on that too, real quick, John. I mean, most companies are still just using only a 1007. Guys, I mean, we're using a rental AVM for long terms. We're using a Air DNA on short terms. These are all upfront before we even get to underwriting. If you're having issues, with your realtor explaining, sorry, we got to put 5% more down, we got to put 10% more down in underwriting, we're figuring out upfront whether or not your loan is going to work within the first 24 hours of you submitting a pre-qualification. Guys, this is for long-term and for short-term properties. Like, we're giving you everything, all you need upfront to prepare your realtors, your relationships, everything upfront.
We're gonna talk about a lot of the great tools that we have, like the quick quote, how to submit a pre-qual. But Jack, you just touched on it, and Stacy's been saying it. We still pre-qual. So basically, Jack, Stacy, and all our other account executives across the country are basically doing a pre-underwrite. They're looking at the 1003. They're looking at the credit report. They're looking at the AVM. They're looking at the short-term Air DNA. They're looking at all that up front to issue you a pre-qual. Yes, it might take 24 hours or less, but I'm telling you, there's a surety in execution.
Yeah, to touch on that, it's better than waiting 2 weeks and getting your denial in the mail. You know what I mean?
Right.
So guys, we're doing all of this, not just for DSCR, but for all of our loan programs. We're preparing you guys for success and not just wasting your time for a week or two, waiting for an underwriter to get back to us on your first conditional approval. Yeah. We're doing all this within the first 24 hours, guys.
And we know how important your reputation and your referral sources are. So, we really take that to heart here at Angel Oak. So, Stace, go ahead. Continue to cover some highlights, please.
Yeah, so we, like Jack said, we're going to do that up front. And for me, going to 80% now on the short-term rent has been very helpful, because I know that was always like, oh, that extra 5%, they really need 80. We also take gift funds on our DSCR loans. If the borrower has 10% of their own funds plus our reserves, which we only require 3 months, 3 months of their own funds, the rest can be gift. So a lot of times that has been coming into play as well. Now, I know you guys are seeing on the screen, we keep talking about the 80% short-term and the 75 for the rental AVM. We do go to 85 LTV on our DSCR on a purchase. That one, we will be relying on the 1007. So what sometimes I will do, just to kind of get a feel for where we think it might come in, when I do the pre-qual, I may lower the loan amount to 75 LTV and run that rental AVM just so I can see what value comes in at. And then I'll change it back to 85 before I send it to you. But that way I can get this feel for what the rental AVM will come in for at that property. Or I might run an Air DNA to see what that's going to come in at as well. But again, the 85 is based on the 1007 off the appraisal. So a couple other things that are real unique to us, I feel like, on the DSCR, we let you close in an LLC that does not have to be seasoned. We do not hit your LTV or your rate to close in an LLC. They can create the LLC today, close in it tomorrow. We don't care how many properties they own. They can own unlimited amounts of properties. We say we'll do 5 loans per borrower. Yeah, that's a gray area in my eyes. I just did a 12 pack, so it's a good borrower.
Going off, thanks, Stacy.
We should probably take this right off the guidelines.
Stacy's right, though. I mean, Stacy, you get a lot of these, and because you've had such long-term committed relationships with your originators. I don't think I've seen anyone get more multi-packs done than Stacy. I mean, it's great. And Michael, here, I'm just going to reach this. He just got a CTC on a DSCR that no other place could get me approved, and the A advised how to structure the deal. Huge win. Michael, thank you for trusting us. So
That is
appreciate that.
awesome.
Yeah. So
And
sorry,
John,
Stacy.
Stacy, sorry, real quick, because you mentioned the LLC stuff. These are also aren't going to be reporting on your personal credit, just FYI. That's a bullet we don't have on here that I just realized. Investment purpose or investment loans with us will not report on borrowers' personal credit.
Yeah, these are business purpose loans, everyone, just so you know. So thanks for bringing that up, Jack.
Mm-hmm.
All right, Stace.
Okay, so we also do these on these are all non-owner single families to 4 units, condos, non-warrantable condos, which I get a lot of in here in my area, and also condo-tels. This is the only program that we will allow a condo-tel on. So if you have that, or if you have a non-warrantable, reach out to your AE right away, let them know why it's non-warrantable, and make sure that it's something that we can do. There's many different reasons a condo is non-warrantable. We do have some hard stops as far as something that we won't do. There's a lot of non-warrantables that we will do. And in my area, again, it's a big program. Permanent green card holders, non-permanent resident aliens. We also allow those on the DSCR program. Interest only option. So we've been talking about the short-term rent and the rental AVMs. Those have to come in at a 1-to-1 ratio. Some ways we can get over that hump. If you're super close to that 1-to-1, if you're at let's say 0.95 or 0.94, changing it to interest only will get you to that 1-to-1 in a lot of times. Again, if you're close to that 1-to-1, because we're going to use that interest only payment to qualify to get to that DSCR 1-to-1 cash flow. So a lot of times we'll look at ways to get you to the 1-to-1. Will we still do the loan if it comes in below a 1-to-1? Absolutely. Again, if it's close, we're going to try to get you there, just because there is a hit to the rate if you are below a 1-to-1. But if you're below a 1-to-1, we will still do the loan down to no cash flow at 75% LTV. That's huge. We call that no DSCR. A lot of lenders call that no DSCR. We'll go to 75. And again, that's new as well. Cash out on these programs, cash out, we will also now go to 80% LTV. So again, all these new enhancements that we're coming up with have been phenomenal game changers for you guys.
Yes, Stacey, we continue to evolve. We've been doing this for almost 15 years, 14 years, and we have performance data, and that's why we continue to enhance our programs and bring value to the originator out there. And then Jack, just touch briefly on some of the states, because these are business purpose loans. Just talk about, if you're not licensed in a state.
Yeah, of course. So unlicensed activity, you'll see this second to last bullet down there. You also don't have to be licensed. You have to be, your brokerage has to be licensed, and obviously us doing business with you, but you don't have to be specifically licensed in those states listed down there to originate a loan in that specific state. Okay. We allow you to, as long as it's all right with your company. If you're a broker shop, great. You just get permission from the owner of your company. You're good to originate loans in those specific states.
Yeah. So Jack, I know Stacy gave us a really good overview of the highlights. Talk now. We're gonna, like I said in the beginning here, we want everyone on this call to be just as knowledgeable as an account executive at Angel Oak. So talk about when you get a 1003, and talk about what you're looking for on a credit report.
Yeah, of course. So credit-wise, we're looking for 3 trade lines of 12 months or 2 with 24 months of activity is what we're looking for trade lines. As for the actual application, we don't need anything related to your income, your employment history. These are no income doc investment property loans. Okay, so we're not looking for anything employment related, anything income related on your actual application. Okay. So those are kind of the 2 things we match when we're looking at your 1003s and your credit reports. And anything I'm really missing there? I don't think I mean, those are the big things. But I guess something to keep in mind, with when you guys are serving your clients and, on a versus a full doc, you're having to pull up your Schedule E's, you're having to pull up all of the data on all of their investment properties. You have your clients that might already have a portfolio of properties. They might have 8 properties. The amount of time you're going to spend pulling docs, your Schedule E's, your lease agreements for all these properties, trying to get your DTI in line, guys, this is what a DSCR loan was meant for, right? We don't have income here. We don't have debt to income. We don't have those thresholds on these loans. So you're not having to get all these documentation or all this documentation for underwriting, because the DSCR loan, it's a no income doc, no DTI loan. So they can have 8 to 10, they can have 30 properties, right? And again, it's an easy underwrite for us because we're only verifying mortgage payments for mortgages reporting on credit, primary, and subject on a refinance. Okay, subject for refinance, to clarify.
And
Jack,
also,
yeah,
sorry, John.
no, go ahead.
You guys check the rates too. Not only are you not needing all this documentation, our rates are very compatible, if not better than conventional rates right now.
Yeah.
Depending on your LTV and mid FICO. And by the way, we take the highest mid FICO of multiple borrowers. So if you have 2 or 3 borrowers, we're going to take that highest mid score and use that. And our rates are in the 6s, 7s. And that's just as good, if not better than your Fannie Mae rates with all their LLPA hits. So, and like Jack said, no documentation, no tax returns, no trying to figure out if they qualify. And also too, if they do have multiple properties and they're in an LLC and not in the borrower's personal name, don't even put them on the 1003. That's just more work for you and more work for the underwriter. Don't even list them. If they're in their personal name or on the credit report, then yes, we have to have them on the 1003. But if they're in an LLC, leave them off.
Yeah, guys, I mean, you're learning from 2 of the best here. Jack, what about, seller concessions?
Oh yeah, 6%. So guys, I mean, these are great for even your new build communities, right? You have a good builder relationship, right? 6%. It's a no-brainer. You can use that towards buy down, rate buy down. You can do whatever you want with those 6% seller concessions. But this is on an investment property, right? 6% on an investment property, right? Like that's huge on your purchase transactions. Great for your builder relationships. By the way, if they're trying to sell properties in their community, great for a DSCR purchase for your clients to link them up with the builder, right?
Yes, so we talk about this like this is for the experienced investor. Is it also available for a first-time investor?
Yes, absolutely. You don't have to have any investment experience at all. And again, we're not going to hit your rate or your LTV for being a first-time investor. Now, if they are a first-time investor, this is their very first rental property, we do want to see that they own a primary residence. We just need to make sure that they're not going to be moving into the property. So if they live at home or live with their or rent, then we want to see that they do have other rental properties and they're just adding to their portfolio. But if they live at home and they're buying their first home and they're calling it a rent, that's going to be a hard sell for us to show that they're not going to move in. Like, who wouldn't want to move out of mom and dad's into your own home? So that could be an occupancy concern there. So we'll do our due diligence when you send us the pre-qual. We'll look at that, that 1003. Do they own a primary? Make sure the primary is not listed for sale. I jump on Zillow or Realtor.com. I make sure that their primary is not listed for sale. We just don't want anything to pop up later down the road on you guys. So we try to do as much, like John said, pre-underwriting upfront for you so your loan goes through smoothly.
Hey, Jack, Eric's asking, are there any prepayment penalties on these loans?
Yes. So it depends on your state, depends on subject property state, but we do have a prepayment penalty. Now you'll see rate incentives the higher term you put on your prepayment penalty, depending on the state. If it's allowed by state law and regulation, we will allow prepayment penalty. You'll see rate incentives, but you can also buy it down. So we do allow you to buy it down to no prepayment penalty term. And then it just depends on your state, right? Obviously, we lend in 47 states, I believe, John, is that correct? 47 states.
About that.
40, yeah, about,
I think about that. It's close, 46.
Right around there. Yeah, close enough. But yeah, it's going to depend on your state. So obviously, you can go to the non-QM quick quote and you'll be able to see, right? Depending on whichever territory you're in, you'll go to the quick quote and you'll be able to see and toggle with your prepayment penalty. If you're trying to quote rates to your client, you'll be able to do all this up front, even before underwriting.
Yeah, Jack, you bring up a couple of quick things here. Stacy Suzanne is asking, can you close in a layered LLC?
So, Suzanne, I'm glad you asked. This just changed. I just found out a couple days ago. We can close in a one layered LLC as long as the borrowers are 100% owner of both LLCs. So you have your LLC and it's layered one time with another LLC, we're still okay with that. Multiple layers, we no longer will okay that, or a layered LLC that's layered in a trust, we no longer allow as well. But the one layer of an LLC to an LLC, as long as our borrowers are 100% owner of both LLCs, we're still okay with that.
Yeah.
And keep in mind, you can create this LLC, like if it's a purchase transaction, you can create an LLC and have your ownership structured right at time of, it doesn't have any existence history, right? So again, you can just, if it's a purchase transaction, obviously they can create a brand new LLC vested on title. We're okay as long as all owners of that LLC are on the loan.
Yep. Yeah. Thanks. Suzanne said, got it. Thank you, Stace. So, all right.
That's a good question because I really literally just found, we just enhanced that or dehanced one.
On top of your stuff.
A couple days ago, so I'm glad she asked.
Right, with the tenure that we have with our account executives, it's really, I know I've said it a couple times, but you can see by Stacy and Jack's knowledge that they can really structure a deal. And, I kind of say, let them know all the hickeys on the deal up front, right? So let them know everything because they will really show you, as Michael said earlier, it was the AE that advised and structured his deal on how he got it closed. So, let the account executive structure the deal, tell them everything about it. I always tell people I'm not a dentist. I'm not here to pull teeth, right? So tell me everything up front. So I appreciate that. So
yeah, and John, I don't even think, did we even touch on the short-term narrative form? I don't think we even touched on the short-term narrative form yet. Yeah, so I mean, short-term narrative form is now allowed with us, just FYI, just as another thing out there for purchase transactions and for refis as well. So that's just something else to keep in mind on top of all of this cool stuff. Not just Air DNA for purchases. Now on a refi, you can also use your short-term narrative forms as well. Okay. We have a couple good AMCs that create a good form for this. It's basically a long-term 1007, but for a short-term analysis. I think Atlas and NAN have good ones as well. So.
Yeah, thanks. So Stacy, Samantha's asking about, you talked about the layered LLC, how many people in an LLC. So talk a little bit about that.
So we want to keep it a max of 4 at the very most. Remember, the more people you have on the loan, the more work it's going to be. We're still going to use that highest mid score, but we're still going to look to make sure that everybody's credit profile fits. So the more people that you have, again, your absolute max on an LLC would be 4. But if you want to try to keep it as simple as possible, 2 is comfortable as far as getting documentation, making sure everybody qualifies. If somebody brings in a mess with a divorce and a decree and I don't know, sometimes it just gets to be a lot of paperwork, and I just like to keep things as simple as possible. You can create a new LLC and close in that one and just put 2 people on it just to keep it more simple. If all 4 want to go on it, absolutely, that's fine too.
And Stace, if you touched on this in the beginning, I apologize if I missed it. Seasoning of funds. I know you like to expound.
I did not touch on that. Thank you for bringing that up. So we only season our funds for 30 days, which that's pretty reasonable.
Mm-hmm.
So we can actually get the loan moving. So if people have mattress money, money just sitting around somewhere. Um, neighbors are
I
going
just dropped something, sorry.
to get that money. Have them stick it in their account now, and we can still keep going on the loan. You don't
Mhm.
have to submit assets when you submit a file with us. I know some lenders require it. We don't. So have them stick their funds, wherever it's coming from, into their account now and let it marinate for 30 days. And then give me that statement when the next statement drops where I don't see the large deposit going in.
Yeah, and can we highlight the fact that it's only 3 months reserves on subject
We
property
did,
alone?
yeah.
I think we already mentioned it, but
Yep.
FYI, if we didn't emphasize it enough, it's 3 months on subject property only. So if they have 10 properties, guess what? You don't have to get 3 months reserves for 10 different properties. Yeah,
Yeah,
it's
Jack, that goes back to you not needing all the ROI, the schedule, the tax returns.
yeah,
I mean,
yeah.
you could
Speed.
probably have enough paper, a foot and a half high of paper that you would require to close a loan conventionally. Where on this DSCR, as Stacy has said, and Jack has brought up again, is 3 months reserves, 30-day seasoning, boom,
And for
and
all
getting
the,
all that information up front.
yeah, for
And
all
all,
the loan. Oh yeah, go ahead, Stacy.
so the reserves can also be in any sort of retirement account. They don't have to be liquidated. They can be in a 401k, IRA, money market, and spousal funds are not considered gift. So if the spouse has funds, we can use their account and we don't need a gift letter because spousal funds, what's yours is mine, what's mine is yours. We don't need gift letters for those spouse.
Yeah.
For loan officers, I mean, your sell on this loan, guys, is speed. You're closing these loans. I mean, me and Stacy, we're closing these loans in 2 to 3 weeks. I mean, guys, people with portfolios of loan of properties. You're talking about you want to know where you make good relationships with your realtors, with your borrowers, with your home buyers. It's on speed. These loans get it done, which by the way, the rates aren't even that bad in the first place. But
Right.
on top of the fact that your rates are actually pretty good, it's funny, I have some loan officers that fail elsewhere where they're trying to document everything, month and a half goes by, everyone's pulling their hair out. I get the fallout, I close it in 2 to 3 weeks. They're like, holy crap, I'm just doing all of my investment properties with you. You will create so much business for yourself just based off of the speed from these loans.
Yeah. And Stephen, that's correct. 3 months reserves, no matter the LTV. So I appreciate you bringing it up, Stephen. That's a great point of emphasis that, yeah, 3 months, whether it's an 80 LTV, 70 LTV, just 3 months reserves. Hey, Jack, I know we've spent some time here. Let's talk about our other program, the DSCR second lien. We're not going to spend too much time on it, but if
Yeah.
you just want to cover some of the highlights, please, Jack.
Yeah, of course. So we have loan thresholds, loan amounts up to 350,000. Minimum loan amount on the DSCR second position. This is a fixed second position lien, by the way. Minimum loan amount's 100,000. Okay. Minimum FICO is 700. Required minimum mid FICO score. Obviously, kind of like what we discussed with the DSCR program, first liens is no income or employment required. The qualification is based off of the subject property cash flow. And we're going to use a lease agreement and 3 months receipt on that as well. Okay. So it's got to be a long-term analysis for your DSCR second, unlike obviously the DSCR first. So feel free to plug and play which fit is best for you, if it's a second position or a first position. Only warrantable on the second lien DSCR cash outs versus the first lien. Just so you know, if it's non-warrantable, we do have options for you on a first lien DSCR cash out, but the DSCR second position only for warrantable. Okay. Investment properties only, obviously. Long-term rental properties. I just explained that as well. I'm getting a little bit of ahead of myself.
Mhm.
Borrowers must document 2 years of managing income producing investment properties. That's correct. So we want to see that the borrower has a track record of being able to manage investor experience. So at least 2 years we require at least 2 years of them managing rental properties. And then our DSCR minimum is 1.2 on the DSCR second position loans, full appraisal required. Lump sum payment obviously is a fixed second position loan. and then no restrictions on how borrowers can use funds. That's going to be similar to the first lien cash outs.
Yeah. Yeah. So again, just, it's a DSCR second lien, and we also have bank statement, HELOC, obviously, part of that. Stace, just tough. We're half past the hour here. Let's touch on the foreign national too, because it kind of falls underneath that umbrella of debt service coverage ratio, right?
Yeah. And I do get a lot of foreign nationals in my area or here in Florida with Orlando, Miami areas as well. So our foreign national is someone that lives in their country, purchasing or refinancing an investment property here in the U.S. If they are from a country, let's say Canada, that participates in the visa waiver program with the U.S., they don't even need a visa, just a valid passport. We do purchases up to 70% LTV. Refis, cash out refis, we go to 65%. The foreign national is probably, even though it sounds scary, it sounds foreign, it sounds scary, it's the easiest program we have. There's, on the 1003, there's no income, no employment, no REO. You put all nines for their social security. We're not pulling credit. We're not asking for reference letters. We're not asking for a foreign credit report. Nothing. Like, it is the easiest loan as far as documentation goes. The biggest things on our foreign national is going to be that DSCR does have to come in at a 1-to-1, and it is long-term rent only. So that's the biggest key on these foreign nationals. We will still pull a rental AVM because the LTV is going to be maxed at 70. So no matter what, we'll pull a rental AVM. We can still use that if it covers our PITIA payment. The other big part with the foreign national is your assets. So the assets, it is 12 months reserves on the foreign national, and all the assets are sourced and seasoned for 60 days. The reserves can stay in their country. Their down payment and closing costs do have to be moved to a U.S. bank 30 days prior to close. So those are the two big keys with the foreign national, is the assets. And
I learned from you, Stace, about bringing in those assets. Bring in extra, right? Go ahead.
Yeah. So because we have to come in at a 1-to-1 ratio, and because we season the funds for 30 days in the U.S., if you're just below a 1-to-1 ratio and they have to put a little bit more money down, have those additional funds. If it's okay with the borrower, have them bring over an extra 10, 15 grand sitting in the U.S., seasoning for 30 days, just in case they have to put more money down. Because if they do, to get to that 1-to-1 ratio, they now have to bring those funds over and let those season for an additional 30 days. So now you're pushing your contract date out. So I always say, if the borrower has the means, have them bring over a little extra just in case we need to put some more money down.
Yeah, I love that. I mean, that's how to get deals done and, not disrupt the process. So, one of the things, Stacey's has, a lot of foreign nationals in Florida, Orlando area, you've got Miami, all across the country, because with all this geopolitical strife around, people are looking to invest in U.S. real estate. So I would also, other ways we're going to talk about our marketing portal in a little while, but, I like to bring this up when we're talking about foreign nationals. Around a lot of universities, people are sending their kids to large universities for education, and they're looking to invest in the real estate while they're sending their kids here. So think of things like that to market yourself a little differently. So, all right, Stace, you're on a roll. Let's talk. We've talked about rates a little bit. How do we get a prequel to us? So let's. I'm going to go back to the homepage, and show me how to get a rate and send you a 1003 and a credit report.
Yeah, so to get a rate, guys, you do not need login credentials. You are just going to go to our website, which is angeloakms.com. It's actually on our signature lines as well, if you've emailed us. So you'll click on the home page, which is what you see on the screen. You'll click that non-QM quick quote button right there in the middle that John's clicking on for us now. You're going to go to the broker channel. And now you're going to pick, we're doing DSCR. So here you're just going to continue. It's just letting you know we came out with an ARM product. So we are at the DSCR program webinar. So we're going to continue with that. So John's entering in a scenario. This is how easy it is. It's so incredibly easy. You're just going to answer all the questions, even the ones that have a defaulted answer, like that 7/6 ARM amortization type. If you know they want a fixed, just make sure you change that to a fixed. So just look at all the questions, even if it has an answer that's defaulted already in there for you. Borrower paid comp, DSCR, if we know it's going to come in at a 1, because we're going to pull the rental AVM. Are you active? Do you have an active license in that state? And then there's where you'll have the short-term rent. Again, it defaults to no, but if you know it's in a short-term rental area, you can click on yes so that you can see the rates if it was a short-term. So with the scenario that John just input, 75% LTV purchase, 760 to a 779 mid score. He did change the prepay from a 5-year to a 3-year. Again, you can play around with all of these options. And then over to the right, you're going to see your rate. So 6.374, phenomenal rate, is actually even giving the borrower back a quarter discount towards their closing costs. So these rates, guys, these are a 30-year fixed rate with hardly any documentation, no tax returns, no qualifying, no DTI, and we're better than Fannie and Freddie.
And you pulled the rental AVM too.
And I'm going to pull a rental AVM for you.
You pulled the rental AVM, yeah.
Yeah, it's amazing, Stace. I was just getting ready to say that I'm not providing tax returns, not provide, your Schedule E, nothing. This is it.
And like Jack said, they're quick loans to get done. I know conventional is also fast. I appreciate that. But they're very fast. I mean, maybe they're not as fast as a private money lender, but we're also not charging 12% with 4 points.
Exactly.
So now you'll just click on to send us a prequal, you'll just click on the rate. You're not locking into anything. And then at the top, this is where it's going to ask you for the subject property. It doesn't have anything to do with TRID or making sure that we disclose. It's just so that we can pull that rental AVM for you guys. So you'll enter your subject property address. You'll select the account executive. I know it's not in red, but don't forget to do that. So the account executive right there. There's a lot of us. Stacey Flanagan, if you're not sure who it is, feel free to select my name. And then you're or Jackson. And then you're going to enter your information, your name, your NMLS number. And then down below, all you're going to do is drag and drop your PDF version of your 1003 and PDF of your credit. Now, if you forget and you keep the income on there, you keep REOs on there, it's only Jack and I that are seeing this. That's fine. We'll remind you, hey, remember to remove that income off the 1003, or you don't need all those REOs listed, or whatever the case may be. This is just coming to us. So don't, get worried if there's something on there that you forgot to fix. So oh, sorry, John, go ahead.
Yeah, no, but like you and Jack, obviously we'll tell them, take the income off, take the job information off there, and when you do submit it. So again, if you're using Angel Oak for the first time, let Jack, let Stacy hold your hand through this process. I'm telling you, they are pros, and I'm telling you, you'll learn. I learn stuff every time we do a webinar. I'm in their presence, so let them lead you down that road.
Yeah, and don't let that hesitate. Like if you're concerned about if what you put on your application is accurate or not, send us the application, send us the credit report. Don't let that, again, it's coming to us. It's not going to underwriting, right? We are going to pre-approve you guys. We're going to do the credit review. We're going to do the application review. It's just, we just know we've been doing it for so long. We know our guidelines. We know what we're looking for, and we know how to close your loans. So when you submit that, we're going to we'll let you know what's missing, what's good, what's not. And obviously, if it needs to be restructured, we can restructure it. So.
All right. And like I said earlier, Jack, any of our A's are like your confessional booth, right? So tell them everything. So they're going to, as Michael said earlier, it was the AE that kind of structured his deal and got it closed when other people couldn't get it done. So we appreciate that, Michael. All right, so
Wait, John, so after you drag and drop your 1003 in credit,
sorry.
if you scroll down a little further, you just hit that submit button and it goes right to your AE. That's it. It's as simple as that. We'll have it pre-qualified for you same day. DSCRs are super easy. We don't have to send the income off for somebody to calculate like on a bank statement program, which may take a little longer. We can get these done for you same day.
Yeah. So it's really easy. One of our AEs had a daughter. Well, she was 8 when she would run those quick quotes, and so easy an 8-year-old can do it. So definitely use that tool. It's a great tool. So Jack, let's go back to the homepage. We've got about 15 minutes left here. So our homepage says innovative solutions for underserved borrowers, right? So let's show what I think is an underutilized marketing portal, but let's show everyone how to get to our marketing portal and the assets and the content that we have there that everyone should be using.
Yeah, thanks, John. So what you're going to do is you're going to go to your TPO portal login or broker login. It's where John's mouse is, or if you want to click on the far left one down below, you're more than welcome to do that as well. Then you're going to see this page. You're going to click and log in with your credentials. If you don't have credentials, reach out to me or Stacy or your local account rep, and we will set you up with credentials. We'll send over exactly what needs to be completed, and then we'll get you credentials quickly. After you're able to log in, as John is taking care of right
What
now,
are we doing?
you'll see that you guys have you have access to a lot of different resources and tools that we provide you for free, right? So you'll see the marketing portal in the middle of the page. Obviously, if you've already pre-qualified, by the way, you're going to click the Add New Loan button. That's how you're going to register your loans. But for the marketing portal specifically, if you just hover over the marketing portal, and let's start with the flyers. We have personalized flyers, or flyers that you can personalize for yourselves. Throw your logo on, throw your contact information on, and dish out to all of your network for free. It's free. There's no charge. You're going to be able to plug in everything right here, download it, save it to your desktop. If you're working on, and this is for all of our products, but more specifically the DSCR today. We also have one for realtor presentations, which, John, by the way, I know you'll probably comment on this, is we do the realtor presentations for you as well. Just contact me, contact Stacy. We will come to your place, come to your shop, or via Zoom if it's a Zoom meeting set up with your network. And we're happy to do a realtor presentation for you to dive deeply into these products, whether it's your financial planners, your realtors, whoever you need to get this information. We're happy to do a presentation for you. And as you can see, John we have a realtor presentation specifically built that you can customize with your actual logos. Not just, it has nothing related to Angel Oak on it. You just scroll down, insert your logos, insert your company, your broker shop's logos, and you're good to go.
Yeah, Jack, that's a powerful presentation. I know, Stacy, you do a lot of them. Jack, you do a lot of them. We don't have a statistic for how many realtors actually close our debt service coverage ratio loan because we don't require job information. But when it comes to bank statements, we do have those statistics, and almost 10% of the loans we close on our bank statement, underneath our bank statement umbrella, are actually for realtors. So I would imagine it's a higher percentage for the debt service coverage ratio. But it's like Jack will go in, Stacy will go in. They don't say anything about Angel Oak, as Jack mentioned. It's just all about you. I'll use Michael because Michael closed the loan with us. So Michael, if you want your account executive to present on your behalf, they're going to go, what are you going to do when you have an investor? You're going to call Michael because Michael has access to these programs. Or if it's a self-employed borrower, you're going to go call Michael because Michael has access to a bank statement deal. It's powerful, guys. There's a account executive here in Dallas, Tom Perry. He Google searched real estate investment clubs and stopped counting at 20. He called his originator and they went and presented to the real estate investment group at a luncheon, and half the room had never heard of a debt service coverage ratio program. Guys, there's business out there. You just got to go out there and market. Shaq, let's just talk about some of the social media, because obviously it's social media. It's the frenzy. Everyone's using it. Talk about some of the social media stuff we have.
Yeah, of course. We have a handful of posts, whether you're using Instagram, Facebook, LinkedIn. We have a bunch of just empty templates that you can download and customize and post to your social media campaigns. So for me, like me specifically, business Instagram, I'll do a lot of business posts, but you guys as well, originators, you can come into here, download any of these and sell it to your entire network. Whether it's via text chain, Facebook, LinkedIn, Instagram, business, whatever you want to use, we have tools for you on this page.
Yeah. So, yeah, Jack, I think I counted between the flyers, social media posts, you could probably post something or market a non-QM program every week for over a year.
Mm-hmm.
I mean, and this is where I'll get on my soapbox here. You don't have to get creative. We've done all the creative for you, whether it's the images, the content, whether you want to market towards realtors or actual borrowers. We have the content for you guys. And as Stacy and Jack have mentioned, these loans close quickly. So if your year isn't off to the start you wanted, I'd be out there doing DSCR all day long.
The amount of speed, the speed, how quickly you can get these done, how easy it is to network with these. A lot of these investors, they have cash willing to invest in these properties. You can create your entire business just on this one loan program and have a solid year, have a fantastic year. And you will get referrals from other investors in their network. You will get it, especially if you're speedy and quick with these, you will get those referrals.
So Jack, while you're speaking, anything in closing, Jack?
No, John, I think we've hammered on anything. I mean, I don't know if I can't sell anything else. This program has too much to sell. I don't know what to do with it. I mean, guys, just rely on us heavily. Like we've been doing this for so long, and obviously with the new enhancements, keeping up with everything, that's just a quick phone call and a quick pre-qual away from getting this loan done within 2 to 3 weeks, guys. In closing, is just rely on us heavily. Call us. I mean, we want to help you create business for yourselves. That's what we're here for. We want to see your success. We care about you guys, and we do want, everything to go well for you guys. So just reach out to us because we're happy to help.
Yep. Stacy.
Absolutely. Reach out to us. Don't be afraid of these. Let us help you structure it. Maybe DSCR isn't the best option for the borrower. Maybe it's going to be to do an investment bank statement program. Those are the things that we'll talk through together and make sure that we're giving your client the best program with the best rate or LTV, whatever's important to them. And back to the social media posts and flyers. A lot of people are scared. A lot of people don't know how to do social media. It's simply just even snippeting something that's already created for you and sticking it on your social media page once a week, once every other week if you feel like it's too much. I have a broker that does it weekly. She gets up on Monday mornings. She posts one of our clips from that, again, we've already created for her. And then she's out the door on her way. It takes literally 30 seconds. She doesn't have to get creative. She doesn't have to think about it. She just does it and goes. We're trying to give you every tool at your disposal to help you guys increase your business, because that's what's most important for us, is helping you guys close more loans, putting more money in your pocket, and helping your borrowers get into their dream home or start their investment portfolio that they've wanted to invest in. So please lean on us. Let us help you. Thank you guys so much for being on this webinar. Any questions at all, don't hesitate. Reach out to your local AEs because that's what we're here for.
Yeah, guys, this is my contact information. If you don't have an account executive, reach out to me. I'll get you in touch with them. But, Stacy and Jack, you guys are the best. I mean, I learn something every time I get on one of these webinars with whether it's you or Jack or any of our other great account executives across the country. So on behalf of everyone here at Angel Oak, for those of you that have closed business with us, Michael, congratulations. Glad you got your CTC. And for those that have not, I hope you feel 100% confident in the ability to send a loan and your referral source and your borrower to Angel Oak Mortgage Solutions. So on behalf of everyone at Angel Oak, thank you for attending today. Again, this will be sent out before end of day tomorrow. But Stace, Jack, thank you for taking your time and educating everyone on this call. Have a great afternoon and a safe Memorial Day.
Thanks, guys.
Thanks, guys.
Thanks, John.
Thank you, guys. Love you guys.
Thanks.